Good morning, everyone. Today, the topic of our presentation is business valuation of India's FMCG and food processing sector. As a part of this study, we have selected five major companies that are HUL, ITC, Hindustan Foods, Godavari Biorefineries, and Devangiri Sugars, and have evaluated them using valuation metrics to assess their financial performance and market position. You have Sandhya? Yes. Okay, good. Yeah. So before moving to company-wise analysis, let's first understand the broader FMCG and food processing sector in India. As of 2024, the Indian FMCG industry is valued at approximately rupees 8.6 lakh crore. This projection indicates a compound annual growth of around 8 to 10% over the next 5 years, which shows this sector has a strong and sustained expansion potential. From a macroeconomic perspective, the FMCG sector is the fourth largest in India, contributing 3% to GDP and providing jobs to nearly 3 million people, especially in rural India, where distribution network and consumption growth are accelerating. This growth is being powered by three key shifts. First, rising disposable income. They're leading to higher consumer spending across categories, which directly translates into stronger revenue growth for leaders like HUL and ITC. Second, urbanization and lifestyle. Uh, uh, Urbanization and lifestyle changes are driving demand for packaged and branded products, creating opportunities for aggressive players like Hindustan Foods, HUL, ITC, etc. And third one is government initiatives, such as the production linked incentives and ethanol blending mandates are providing a boost to niche players like Godavari Biorefineries and Devangiri Sugar. So now I will hand it over to Diksha.
Now, the FMCG sector in India is one of the most dynamic and resilient industries, as we know. So, what makes it truly unique is that it deals with products people use every day, whether it's food, beverages, skincare, soaps, detergents, or personal care items. Now, demand for these products never really disappears. Even in times of economic slowdown, families may cut down on luxury spending, but they'll still buy toothpaste, cooking oil, or packet of biscuits. So this gives the FMCG sector stability that very few other industries can match. However, the challenge lies in the profitability aspect. Like most FMCG items are low cost, which means companies don't much earn as per the unit. Instead, their strength comes from scale, like selling millions of units daily across the country. That's why distribution is the real backbone of the sector. For instance, Hindustan Unilever has like built one of the most extensive distribution network with reaching over 8 million network. Some 8 million retail outlets from like big city supermarkets to the smallest kirana stores in remote villages. And today the distribution is not only about the reach, it's also about the speed, which is why we have the quick commerce platforms like Zepto, Blinkit, and other online platforms are which are literally just reshaping consumer expectations for instant delivery. Alongside these fundamentals, the sector is also evolving with the powerful trends. Like the first one is premiumization, which means that as the income is rising, the consumers are also shifting from basic to premium quality of products. Like we have started from the loose tea to premium packaged brands of tea, or from like simple biscuits to cookies and chocolates. Then there is ITC, which has like capitalized on this by building strong packaged food brands like Sunfeast and Ashirwad, which appeal to more aspirational consumers. The second we have is sustainable packaging. Like with growing environmental concerns, the companies are also being pushed towards a more recyclable and eco-friendly solution. For example, like HUL has started replacing single-use plastic with biodegradable sachets and refill packs, aligning both the consumer expectations and regulatory pressures. And finally, we have is the health consciousness. Like post-COVID, also we can see that demand had surged for organic, plant-based immunity boosting products. Brands were responding like that time HUL launched its Horlicks, which was with like immunity benefits. And moreover, ITC also invested in millet based snacks. So, Diksha. Yes, sir. Take a very good. Wonderful.
Now, let's look at the major categories driving the FMCG and food processing sector. The very first one is food and beverages. It is the largest segment in the industry, FMCG industry. It covers all the packaged foods and everything we consume daily. Second, we have personal care. This includes all the cosmetics we use, and the products are linked to the hygiene and beauty. They are very essential part of the every household routine. Third, we have household care. This covers all the items like detergent and disinfectants and cleaning products. These are the backbone of home maintenance, ensuring cleanliness and sanitation. And finally, we have OTC and healthcare. This includes all the this category is growing rapidly. It includes nutraceuticals and dietary supplements and over-the-counter medicines, reflecting people are more health conscious today. Together, these four categories make up the backbone of FMCG sector, and each one addressing the unique consumer needs, and all of them contribute strongly to the industry growth. Now, I'll pass on to Diksha.
So you're Sandhya.
Yes.
Now, I would like to talk about the current trends reshaping India's consumer market. So, first we have is digital sales and quick commerce. So, digital sales and quick commerce is basically refers to buying essentials online with deliverables happening then and there only in minutes, not just days. Now, this shift has moved from being a convenience for a few to becoming a mass market phenomenon. In fact, India's quick commerce market already stands at 3.5 billion US dollars in 2025 and is projected to cross US $4.6 by 2030. And what makes it even more striking is that quick commerce accounted for nearly two-thirds of e-grocery orders in 2024 and it's also expected to keep expanding at over 40% annually till 2030. Moreover, this explosive growth also shows that platforms like Amazon, Flipkart, JioMart, Blinkit, and Zepto are no longer just alternatives. They have become like the distribution pipelines. And with this, the consumer expectation has also been permanently redefined, like groceries delivered in 10 minutes. Then we have is premiumization. Like I discussed earlier, premiumization is basically consumer shifting from basic products to high quality branded value added options. And what's more striking is that shift is no longer metro driven, as rural India now accounts for 51% of affordable premium FMCG volumes, which has literally surpassed urban markets, which reflects a nationwide rise in aspirations like consumers are, which shows that consumers are like ready to purchase and buy more and also upgrade their lifestyle choices. Then we have a sustainable packaging, which means the use of eco-friendly, recyclable, or biodegradable materials that reduce the environmental impact. So consumer today's are also increasingly eco-conscious and expand brands to care much as they can. So that's why we have these companies, which are also not just ethical choice, but are also striving to meet the consumer demand. Then we have is health and wellness focus. Now, today, India's health and wellness market is already worth 156 billion US dollars in 2024 and is also projected to reach $257 billion by 2033, growing at 5% annually. So, I would say that FMCG is really growing at a vast variety of rates.
Diksha, you have a quality of moving your hand. That's good. Okay.
So now let us focus on two industry leaders in FMCG, HUL Hindustan Unilever Limited and ITC Limited. Both companies dominate the Indian consumer market but follow a different business models and value profile. First, let's look at HUL. HUL commands an estimated 12% market share, supported by iconic brands like Surf Excel, Dove, Lux, Blue, Lipo, etc. Its share price is currently trending at 2,638 rupees. It's with a market capital of around 61,000, sorry, 6,19,000 plus crore. It is sales value equal to more than 63,000. Its P ratio is 58 point. So we have calculated all this in Excel. So should we share that or?
You carry on with whatever.
P ratio is around 58.2, which is very expensive compared to its peers. Its EV upon EBITDA is 38.1 times.
Just show the Excel sheet.
So it's,
If you can.
so actually you have shared no
Just carry on.
and growth
But
is
you have not put a P slide here.
so we have like in the last
For the last
So the slide. Yeah, it is there. So when you say, let's just pause there. So HUL is trading at 28.
Point two. That
Okay,
is.
and ITC is 25, Hindustan Liver 56, Godapri, maybe it's not profitable. So they agree to sugar 42. So we have revenues. So why ITC is having a low, basically P ratio?
That's 25 times.
Yeah, so it is low compared to like Hindustan Unilever. It is because the ITC, do you have no idea?
Majorly, I think it's from cigarettes, but apart from that, other sources like
Because
HUL.
it is, basically. So because, major sales is coming from the cigarettes, and cigarettes are, taxed at a very high rate.
40%.
So the profitability in cigarette segment is not that much.
Yes.
So generally the investors don't, put a lot of money into ITC. So it doesn't pushes the B valuation.
Yes.
So maybe that can be the reason. So go next slide.
So, for ITC,
Yeah.
ITC has 8% FMCG share and market, but it is also India's largest secret manufacturer. It has diversified into packaged foods like Ashirwad Atta, Bingo, Sunfirst biscuits, etc., as well as in hotels, agribusiness, and paper boards. It's seeing it at financial values. Its share price is currently trending at 405.56 per share with a market capital of 5 lakh plus 5 lakh 8,000 plus crore.
Again, if you look at the product portfolio of ITC, it is not purely an FMCG company.
Yes,
It is also present into like hotels, paper boards, okay, agri business. So it's present into some other businesses, which are generally the FMCG. It is diversified. That's good. But generally the FMCG trades at a higher P ratio, and all other like hotels. If you look at the hotels P ratio, they will be much lower.
Yes, sir, because their more focus is major focus is on FMCG products.
Yeah, so other companies like this one is purely a FMCG play, whereas ITC has a lot of hotels also. Okay. Now hotels is basically a discretionary product. Like people only spend money in hotels when they do earn a lot, or when the business is doing very well. Okay, so that's why the hotels will be booked only under the two conditions when people travel around. Okay, so it is linked to the economy, ups and downs. Whereas FMCG,
FMCG
it's
like all times.
all that. It's a consumer staple.
Mhm.
So a consumer staple company will always carry a high P ratio. Whereas a non-consumer staple company or a discretionary product company will command a lower P ratio. So that's it's a mix of both. Not only cigarette, but because of the other things also. Like you said, paperboard, hotels, agri business. So all these businesses are not purely FMCG.
Yes, sir. So looking at their strength, HUL offers premium stability since it is like highest FMCG company in India, and it is also market leadership, but comes with expensive valuation. Whereas ITC, it combines with strong earnings, attractive valuation, and diversification, making it a more attractive buy currently.
So have you calculated somewhere the beta?
Beta,
Is-
yes, in Excel.
Except इसमें क्या दिखा है?
Send you the Excel file.
अच्छा, just look at an Excel file in your listing. What is the beta of Hindustan Unilever?
Okay.
ITC beta.
ITC 0.57. Less than
0.57. And Hindustan
So
Unilever.
it is high. 0.37.
Okay. So
Both are below.
yeah, both are below one. But if you look at ITC, it should normally have a higher beta.
So the time when we checked it was 0.57.
Okay. I'm just saying it's okay. Fine. the beta of ITC would normally be higher than the pure FMCG play. Because it is present in hotels. So hotel industry will do very well when times are good. When the times are not good, economy is not doing well, the hotel industry will not report very good numbers. So they will have a lot of volatility in their earnings. Okay. So which will translate into higher beta. जो कंपनी ज्यादा रिस्की है उसका बीटा भी ज्यादा होगा all Hindustan Unilever or Dabur and everything, all the betas will be lower because they are purely FMCG play. They are making only consumer staples, irrespective of what is happening in the economy. They always do well.
Yes.
Whereas some companies like like ITC, which is a mixed bag, diversified, so it is present in hotels. Okay, hotel industry will do only well when everything is
Financial.
so there will be a lot of volatility in their profits of their hotel business. Whereas the FMCG pure business, their volatility will be less. So if there is less volatile, the beta will also be less. Right? Do you know what is beta?
Yes, sir. It shows like the market risk.
The market risk. Okay, it captures the market risk. And market risk is basically how volatile it is
Like
compared
how
to.
the share is reacting to the market situations.
Yeah,
Like
so that means
is
market
going
means
up,
like
going
how it is compared to Nifty 50 or Nifty 500 stocks. The more the volatile the profitability of the stock compared to the overall market and the beta. So if I ask you one question, in very good times, when the economy is doing very well, will high beta stocks give higher returns or low beta stock will give higher?
high rate plus one.
High beta will give more because in good times those companies will sell more and earn more and their returns will be higher. So in good times, you should be putting your money in high beta. If in the next 3 years, the market is going to be good. If that is the kind of a situation.
Now, talking about Hindustan Foods Limited, it has been the largest, it has been the fastest growing company, acting as a contract manufacturer for leading FMCG companies. It has been posted the revenue CAGR, that is compound annual growth rate of 35 to 60% and profit CAGR of 55%. Now, CAGR means the growth rate every year. And if you talk about margins, margins are still low at Hindustan Foods, that are 8 to 10%, which means after covering all the cost, company keeps a very little profit. But Hindustan Foods is improving as the business scales. I mean, as the business is growing, valuations are rich at 55 times PE, and PE tells how costly the share is. Here the investors, if you talk about Hindustan Foods, the investors are paying more and they are paying at a premium price, which means company shares are expensive compared to the earnings.
How many slides are left now?
Four.
Just we have to move a little quickly because
Okay, sir.
one more presentation will have. Please.
Second, coming to Godavari biorefineries, it is an integral biorefinery with a strong presence of ethanol and chemicals. It is a key beneficiary of India's 20% of ethanol blending program by 2030. However, the revenue and earning are highly cyclical, depending on sugarcane and molasses prices. EPS, if you talk about EPS outlook is weak, projected to decline by minus 96.9%. CAGR. And now talking about Devangri Sugars, it is a smaller integrated company, sugar and ethanol company. The revenue. May I continue?
Sure.
The revenue CAGR has been the modest by just 2.3%, but the profit CAGR is stronger as compared to the profit CAGR, that is 36.7%. Driving the ethanol operations, EPS is expected to grow nearly at 38%, showing a momentum. However, the PE ratio is 42 times, Again, showing the share is quite costly compared to the earnings, and dependence on government policies and crop cycling. It is dependent. Devangri is dependent on the government policies and crop cycling. Volatility is very high in this company. This makes the speculative buy more suitable for risk takers.
Okay. So it's a sugar company. Is that-
Yes, Devangri Sugars.
Okay. GST, yeah, that's good.
Yes. Recently, there were changes in GST slabs. Mostly FMCG goods were under 12% slabs earlier. Now it has shifted to 5%, except for ITC, since they are manufactured in Sweden. So they are facing 40% tax. So now we will discuss company-wise, starting with HUL. Its projected earning per share is 46.16. Since most of its portfolio falls under 18% GST, a moderate cut could lift EPS to around rupees 48, like from 46 to it may rise to 48. So there is about 4% improvement. This shows how a stable consumer goods respond with modest gains. Talking about ITC, it is the biggest beneficiary with a large chunk of revenue from cigarettes, which faces 40% GST. Even a small tax cut meaningfully boosts profitability. EPS improves from 16.93 to 18.8, which is almost 11% rise, making ITC a clear winner from GST policy. For Hindustan Foods operating, it operates primarily as a contract manufacturer in the FMCG space. EPS growth grows from 9.33 to about 10.1, nearly 8% higher. And this happens because a reduced tax improves throughput and margins in outsourced manufacturing. For Godavari biorefineries, it remains weak. Its EPS was negative in 2025, like minus 4.57. EPS, even after GST cuts the ethanol related segments, it only narrows losses slightly to about 4.3. The structural weakness overshadows tax benefits, so there is no much benefit. For Devangiri Sugar with its razor thick margins, benefit strongly at percentage terms. EPS improves from 0.08 to 0.09, giving 12% lift, with the absolute number remains small. So in summary, we can say GST reduction helped all, but ITC gains the most.
What is the source of this?
Sir, like I calculated it.
From where you got this
Sir,
number?
I got these numbers from, like, I got the projected EPS for per year, and I saw the tax slabs and then calculated it with the formula, like taking the 3 4 year EPS growth and like EPS in the final year divided it by EPS initially given.
Fine, sure. So it's your internal own calculation.
Yes, and like
But
there
anyway-
was no exact information available, so I calculated it.
Sure. It's good. I mean, that's a good slide anyway. And whether it is authentic or not, we don't know, but it's a good slide. That is what I wanted.
Now, I would like to talk about the EPS CAGR, which tells us basically about how companies are growing their earnings. And then second, we have is EBITDA, which shows us the operational profitability in absolute terms. Now, if we see EPS CAGR table, then we'll find that HUL sits at 8.1%, which shows a steady brand-led growth, which shows that HUL has scale, premium positioning, and a loyal consumer base. It's also a reliable compounder, but the growth rate is moderate in comparison to the smaller, more aggressive players. Then we have is ITC, which shows EPS CAGR of 9.4%, which shows that it's slightly ahead of HUL. But the story here is diversification, because basically cigarettes remain the profit engine in ITC, but FMCG, agribusiness, hotels, and paper goods together make ITC resilient as well, even when the segment underperforms. So then we have is Hindustan Foods, which is at 34.3%, which shows the fastest growing of a lot, but it is the contract manufacturing and outsourcing model as scaling rapidly, which gives us 30% EPS CAGR. But let's remember that this high percentage growth comes from a much smaller base, so that's why It's 34.3. So while the growth is impressive, the absolute earnings, if we look at, then there are still nowhere close to giants like HUL or ITC. Then we have is Godavari Biorefineries, which shows a minus 96.9%, and the negative EPS, which you see is shows how volatile and policy dependent ethanol linked business can be. Now, the earnings swing heavily with government blending mandates, cane pricing, and policy timing. Then finally, we have is Kavangiri sugar with 38%, which shows very strong growth on paper. But again, it's cyclical. Like the performance depends on sugar and ethanol pricing, and these are also closely tied to like market segments and government regulations. So while the headline number looks fantastic, risk levels are much higher. Then we, if yes, sir.
Yeah, okay, carry on.
Then, if we look at the companies planning their next phase of growth, then HUL is doubling down on premiumization and digital first launches. Like it's now launching more premium products to access its growth. And then ITC is also scaling not just its in FMCG but also in hotels, as we can say, or agribusiness. Then, if we look at the EBITDA, then it shows the operating cash each company is generated. So, ITC leads here with 21,490 crores thanks to its high margin cigarette business and the diversified operations like its main costs are leaf, tobacco, agri inputs, and cigarette taxes. Then we have this HUL, which follows with 165 crore powered by strong brands and premium pricing, but the margins are also weighted by the advertising, palm oil, and diversification costs. Then we have Hindustan Foods, which reports 308 crore, much smaller in scale with pressures from raw material, wages, and thin margins. Then we have this Godavari Biorefineries with 120 crore, where sugarcane, ethanol production, and fuel costs are the key refineries, while Davangiri Sugar is the smallest of 10 crore, heavily affected by the cane crushing and ethanol blending costs, making it a cyclical and low margin player. So to
Okay.
give,
Diksha,
yes, sir.
one thing to mention. When you are comparing the companies should be comparable. Okay, fine.
So
Okay, no issues.
actually we showed you in earlier also.
Like when we
For
search
Godavari
for
and Devangiri, we are not getting the
Fine,
financial.
it's okay, it's okay. So it's okay that, but I'm just saying, when you're comparing for relative valuation,
Yes.
the companies should be comparable. You can't, when you're buying a house, suppose, you can't compare a house in Delhi versus, a very small town of maybe any other city, okay, and say that, how do we compare? There will be no comparison, okay. Like even in Delhi, you say, Jamna के पार्क और साउथ दिल्ली को कंपेयर करोगे दोनों में जमीन आसमान का फर्क. So here also you're comparing companies like Hindustan Unilever and ITC
With Devangiri.
with Godavari and Hindustan Foods.
Yes, they are
So
very.
there will be no comparison.
Even the screener, they were
Screener
the
also.
screener
So you know, any game.
harsh
Okay.
and
They are not doing a relative valuation, so whatever they could find, they have done it. But when we are comparing,
The company should be
yeah. Suppose if you are going to buy a house in Kolaba, you're going to compare all the Kolaba houses and then try to see what is the kind of at what multiples they are trading, so that you can value another house in Kolaba. But इसके साथ valuation कुछ नहीं होगा ऐसे. But anyway, just a point. Okay, I'm not going to make any kind of a negative of that.
So, and here's a snapshot of Hindustan Unilever share price, which was like 2,709 the last I checked. And in the next 1 year, analysts also think that it could go high as 3,420 or as low as 1,966.
So how many people are saying buying this thing to Hindustan? How many analysts are tracking Hindustan? अरे कोई बात नहीं देख लेंगे.
Sir, for Hindustan Unilever, it is a hold.
It is.
It is a hold.
It is a hold, but how much? It's okay.
Okay.
Hindustan Unilever is on a hold from last 1 year, 2 years. It was not doing so well compared to what it has done in the past. But
How many?
okay, no issues. Next, last slide. So this is your recommendation.
Yes, sir.
Okay, last slide.
Yes, sir, this is the last one. For HUL, it's very expensive with the PE ratio more than 58 times and EV/EBITDA is 38 times. So it is a strong brand and it shows a steady cash flow. Our dividend yield is 1.64%. So as per us, the
No, like,
investors should
one more
hold.
thing. Like HUL के साथ you would have compared Dabur. So Dabur तो होगा उसके अंदर नहीं था.
9,000. नहीं था, sir. स्क्रीनर में बस ये 5 कंपनीज थी like we went on the peer section इसे 5 थी.
Dabur is again a FMCG company.
Yes sir. Yeah.
Right?
So, but screen.
And Colgate Palmolive is again a FMCG company. Okay. The right companies would have been compared would have been equal size companies. Okay. So काफी सारी company FMCG में which are equals, okay, like HUL, Colgate.
Yes sir.
Palmolive.
We even heard for the first time about Godavari and Devangiri.
ठीक है
पता नहीं था.
अभी कर लिया बट आपको कंपनी की जो सिलेक्शन होनी चाहिए मे बी समटाइम द स्क्रीनर इज नॉट गिविंग यू द राइट नंबर ऑफ कंपनीज सो यू हैव टू थिंक अबाउट व्हिच आर अदर एफएमसीजी कंपनीज सो जस्ट go to ChatGPT and say which are the top 5 and just do this exercise अभी देखो आप ChatGPT में जाओ and ask which are the best which are the top 5 FMCG companies in India just do that
HUL, ITC, Nestle, Varun Beverages,
Nestle is interesting
Godrej,
Godrej
and Varun Beverages.
so these are the companies which are coming up.
Yes, sir.
Right. But whereas you have taken, only
HUL and ITC are top ones.
किस सारी company को है ही
Yes, sir.
नहीं. They don't stand.
सर उनको भी नहीं मिल रहा था इसका डेटा like P 0%.
So this is a learning, whenever you are doing next time, ठीक है. You should pick up the top companies. Then only you can compare them. इसमें comparison कुछ नहीं है. इसमें कोई comparison नहीं है. When you say all this chart is meaningless.
So from next time we'll take the
It's
comparison.
okay. I'm not going to make any this thing. It will all purely on your performance what you have done.
Okay.
But अगर कोई strict professor होता तो आपको नंबर शुरू कर देता. Okay, fine, go ahead. Okay.
And for ITC, it has an attractive PE ratio of 25 times. EBITDA is also high. It gives highest dividend. Since it is diversified and has a strong margin, so buyers should buy the shares and hold it for a best balanced growth of income. And for Hindustan Foods, it also has high growth with CAGR 34%.
Okay, just hold on. These companies is their presentation. And I gave a missing comment that they are not comparables. Okay. Maybe the screener is giving you a list, which may be the right one. So go and check with AI. Which are the top comparable companies in this sector? Present the data of that. But अगर आपने बना लिया है, it's okay. Fine. So, there is a company called Nestle, which has been missed out. Godrej, which has been missed out. So there are other companies. Okay. So you have to present the companies which are comparable. Then only you can make a valuation. Otherwise, not. आपकी तो company थी सब ITC है. Sorry, IT company है उसमें कोई debate ही नहीं है. They are all companies that are listed in the space. Okay.
So now,
अभी देखो अभी टाइम हमको कम है. हाँ? Next class. Next class.
Yes.
ठीक है.
so
हाँ एक्सेल दिखा दो चलो आप ही दिखा दो सिर्फ.
sir,
Because now we are going to have a presentation next time, so let's see that Excel.
आपके लैपटॉप आपको सेंड कर दे एक्सरसाइज.
हाँ, मेरे को भेज दो. Just hold on, please.
सेंड द एक्सरसाइज.
आ जाओ फिर आ जाओ फटाफट आ जाओ.
Please.